Albert Einstein once called compound interest the eighth wonder of the world. And when it comes to investing, index funds are the ultimate way to harness its power. All right, picture this. You have $50,000 sitting in your account. It's just there, doing nothing. Now, you could spend it, or let it sit in a bank earning pennies in interest. But what if you could turn that money into $150,000, $200,000, or even more without constantly watching the stock market? That's where Fidelity Index Funds come in. These funds let you invest in hundreds, even thousands of companies all at once. No stock picking, no complicated strategies, just steady, long-term growth. In this video, we're going to look at the 5 best Fidelity Index Funds. We'll break down how much your $50,000 investment could grow over time, and the numbers might surprise you. So, if you're wondering where to invest for maximum returns, stick around. By the end, you'll know exactly which funds could help you build serious wealth. Chapter 1. Why Fidelity Index Funds? So, why Fidelity Index Funds? What makes them special? Well, for starters, they're simple, affordable, and effective. Fidelity offers some of the lowest cost index funds in the industry. Some have an expense ratio as low as 0.015%. That means you keep more of your money instead of paying high fees. And when you're investing for the long run, even small savings add up big time. Another reason? Diversification. Instead of buying individual stocks, these funds spread your investment across hundreds or even thousands of companies. That reduces risk and makes investing less stressful. Plus, these funds have historically delivered solid returns. Many have outperformed the market over time. And the best part? They work on autopilot. Just invest and let compounding do the heavy lifting. Now, let's get into the good stuff. Here are the 5 best Fidelity Index Funds to invest in today. Chapter 2. The best 5 Fidelity Index Funds. Number 1. Fidelity 500 Index Fund, or FXAIX. The S&P 500 Powerhouse. Let's start with one of the most popular and most trusted index funds out there, Fidelity 500 Index Fund, or FXAIX. This fund tracks the S&P 500, which means you're investing in America's 500 largest companies. These are household names: Apple, Amazon, Microsoft, Tesla. Companies that dominate the market and shape the economy. One reason investors love FXAIX? It's cheap. The expense ratio is just 0.015%, meaning for every $10,000 you invest, you pay only $1.50 in fees per year. That's almost nothing compared to actively managed funds. But what really matters is performance. Over the last 10 years, FXAIX has delivered an average return of 13.3% per year. That kind of growth can build serious wealth over time. So, if you invest $50,000 today, in a year, it could be worth around $56,000. In 3 years, that jumps to $72,000. 5 years, around $92,000. And if you stay invested for 10 years, that $50,000 could grow to $170,000. That's more than tripling your money. This fund is perfect for long-term investors who want steady, reliable growth. No need to time the market. No need to pick individual stocks. Just invest and let it grow. But what if you want even broader market exposure? Well, the next fund goes beyond just the S&P 500. Number 2. Fidelity Total Market Index Fund, or FSKAX, the most diversified fund. If you want to own even more companies, then you might like Fidelity Total Market Index Fund, or FSKAX. FXAIX covers the biggest 500 companies, But FSKAX tracks the entire US stock market. Over 4,000 companies. That means you're investing in large cap, mid cap, and small cap stocks all at once. And just like FXAIX, the expense ratio is only 0.015%. So you're paying next to nothing in fees. Now, let's talk about performance. Over the past 10 years, this fund has returned an average of 12.8% per year. It's slightly lower than FXAIX, but there's a reason for that. Since it includes smaller companies, it has a bit more balance. Large cap stocks provide stability, while mid and small caps add extra growth potential. This makes FSKAX a great all-in-one option for investors who want broad market exposure. So, what happens if you invest $50,000 in this fund? After a year, you could be looking at around $56,000. In 3 years, $72,000. 5 years, close to $91,000. And after 10 years, around $166,000. It's a strong pick for anyone who wants to own a piece of the entire US market without picking individual stocks. But what if you want even higher growth potential? That's where the NASDAQ fund comes in. Number 3, Fidelity NASDAQ Composite Index Fund, or FNCMX. High growth, high risk. Now, if you're looking for even bigger returns and you're okay with a little more volatility, then Fidelity NASDAQ Composite Index Fund, or FNCMX, might be the one for you. This fund focuses on the NASDAQ Composite, which is packed with high-growth tech stocks. Companies like Apple, Amazon, Tesla, and Nvidia. The kind of businesses that change the world and push the market forward. But there's a trade-off. The expense ratio is 0.29%, which is a bit higher than the other funds we've talked about. Why? Because this fund heavily leans into technology and innovation, which tend to outperform the market over time. And the results? Over the last 10 years, FNCMX has averaged an impressive 15.9% annual return. That means a $50,000 investment today could grow to around $58,000 in a year. In 3 years, about $78,000. 5 years, over $104,000. And after 10 years, it could reach $219,000. That's more than quadrupling your money. But here's the catch. This fund is more volatile. Tech stocks rise fast, but they can also drop fast. So if you invest in FNCMX, be ready for some ups and downs along the way. Now, what if you want strong returns without paying any fees at all? Well, the next fund is completely free to own. Number 4, Fidelity Zero Total Market Index Fund, or FZROX. No fees, solid growth. This one's special. Fidelity Zero Total Market Index Fund, or FZROX, is exactly what it sounds like. Zero fees. Most index funds charge small fees, but FZROX has none. That means every dollar you invest stays in your account. It tracks the entire US stock market, just like FSKAX. But instead of charging 0.015%, it charges nothing at all. Performance-wise, it's been very strong since its launch. It's been averaging around 14% per year, similar to FXAIX. So, if you put $50,000 into FZROX, you could see around $57,000 after a year. In 3 years, $74,000. 5 years, $96,000. And after 10 years, about $185,000. The only downside? This fund hasn't been around as long as FXAIX or FSKAX, so it doesn't have a decades-long track record yet. But if you want a zero-cost way to invest in the entire US market, this is a fantastic choice. Now, let's talk about something different. So far, all of these funds focus on US stocks. But what about the rest of the world? Number 5, Fidelity International Index Fund, or FSPSX. global diversification. If you want to invest beyond the US, then Fidelity International Index Fund, or FSPSX, is worth considering. This fund focuses on developed markets outside the US, countries like Japan, the UK, and Germany. Investing globally helps spread risk. So, if the US market struggles, international stocks can help balance things out. The expense ratio is just 0.035%, which is incredibly low for an international fund. Now, here's the thing: international markets grow slower than the US. Over the past 10 years, FSPSX has averaged about 5.4% per year. That's lower, but it provides stability. So if you invest $50,000, after a year, it could be worth around $53,000. In 3 years, $59,000. After 5 years, $65,000. And in 10 years, about $85,000. It won't triple your money like some of the other funds, but it gives you exposure to global markets, which could perform better in the future. Now that we've covered the top 5 Fidelity Index funds, the big question is, which one is right for you? Chapter 3: Comparing the 5 funds. If you want steady, long-term growth, FXAIX or S&P 500 Index Fund is a solid pick. It's reliable, proven, and packed with top companies. For maximum diversification, FSKAX, Total Market Index Fund, gives you exposure to the entire US stock market, big, mid, and small companies. Looking for higher growth potential? FNCMX, Nasdaq Composite Index Fund, focuses on tech and innovation. More risk, but bigger rewards. If fees bother you, FZROX, Fidelity Zero Total Market Fund, is completely free. No expense ratio at all. And for global diversification, FSPSX, or International Index Fund, spreads your money outside the US. A smart way to hedge against US-only investments. So, which one should you go for? It depends on what your investment goals are. So, what did we learn? Fidelity Index Funds are a powerful, low-cost way to grow your money. If you invested $50,000 today, some of these funds could triple or even quadruple your investment over time. FXAIX, FSKAX, FNCMX, FZROX, and FSPSX. Each one has unique advantages. The key? Start early, stay consistent, and let compound growth work. Investing isn't about getting rich overnight. It's about building wealth over time. So, which of these funds do you like best? Let me know in the comments. And if you found this helpful, like and subscribe for more investing insights.